Welcome to the March 12th, 2018 Advance Report for McGowanGroup Asset Management clients and NetWorthRadio.com listeners. Topics this week? Well, I'm Spencer McGowan, your financial weatherman. We're going to start with jobs. What's it really like out there? This is not a recession. That's a recession. This is overall employment in the United States. 138 million dropping tragically to 130 million, 8 million jobs lost. But since that time, look at this. 2015, we grew to record employment over 140 million, on our way to 150 million, based upon the most amazing month of job increases that I've seen in my career. 313,000 new jobs added in the month of February alone. If you're looking for a pay raise, the average pay raise year over year was 2.6%. Take that to your boss to increase your net worth. Here's the weather report on U.S. equity prices. This is Dow Jones Industrial Average. What we've got right here is that peak of 26,500. The rebalancing correction that it was associated with what I call the February winter storm. Dow falls near 23,000. That's a 3,500 point drop. Ouch. And everybody was worried. We told you it was just rebalancing. Now we're at 25,000. A rally to 25,000. But the headlines this week were all about trade wars and White House chaos, and every down market, every down day was linked to political headlines. That's like trying to play golf with your laptop instead of a golf club. All right, here we go. QQQ, look at that. New high on the NASDAQ this week. That tells you the storm is cleared. Tech stocks, which I believe are overvalued and quite dangerous, led the charge on this rally, and you can see it here in the new high for the NASDAQ 100. Here's one of the laggards, Irving-based ExxonMobil. You can see this grand rally right here as oil went to 140. This was a 12% total return, average annualized total return from here to here. This is a case, though, for investor lessons on rebalancing, right? Because from here to here, that's 10 years with a drop in price. Ouch. And everybody's like, wow, we just should have bought Amazon, right? This is not a recommendation for ExxonMobil or Amazon. We only do recommendations when you come down to the Crescent, get the tour, and get a written financial plan for you and your family. Now let's look at something different here. ExxonMobil, what if you reinvested dividends? So lesson one is gradual harvesting. Take the fruit off the tree after each major rally, 10 to 20% harvest. Keep the position at a certain percentage. But the other is dividend reinvestment. Let's look at this. This is a negative price return for 10 years and a positive run-up. Reinvest your dividends, what do you get? This is that 12% total return. And then we go 10 years. What we get from here to here is about a 1.5% total return. It's still positive with dividend reinvestment. So the case for harvesting, dividend reinvestment. Two categories we're going to cover in this weekend's long play program. One is global lending, where even in the current market you can reinvest net interest at about 7% or more. And when you do have price fluctuations longer term, it can work for you because of the reinvestment. The other category will cover dividend companies that could be a bargain because energy infrastructure already had a bear cycle, unlike the tech sector, and it's inflation friendly. S&P 500 annual earnings. There's the recession. Here is a drop, curiously, to about 2016, where you went from 115 after-tax earnings, $115 per S&P unit, down to about 105. Look at this, rising over 120 in the last report, and this is annual. The quarterly numbers have been coming in closer to 140. Tax reform takes this over the next 3 years, according to analyst projections, up to $190. That's nearly a 90% increase in the earnings, after-tax earnings of U.S. companies. That's extremely good news. I'm Spencer McGowan, NetWorthRadio.com. Join us in the long play program. We'll talk about trade wars. Got a special guest from the petroleum industry I think you're going to like, an interview with Kevin Bob. each and every week. We'll be right here for you on our YouTube channel. Please share it with your friends. If they've asked you for advice on an advisor, please share the link with them, and your conversation over your next glass of wine, I hope, will be much more interesting because of our YouTube effort here. NetWorthRadio.com for the extended program and more research. I'm Spencer McGowan. Thank you for joining us. We'll be back next week. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.